an 80-point up move that you're seeing on the index, 83 points now, 90 points higher. So, yes, the pullback has come through.
So right now, up about 65 points on the Nifty. The sensex has gained 228 points. Still, we are up around 90-odd points. And that is a good gain going by what we saw in the global markets as well.
17,100 is where we are at. Now, 120 points higher is where we're going to finally end the day at, which is not a bad outcome at all. Yesterday's high was 17,066, and we're ending about 50 points on top of that.
Hello and welcome to CNBC TV18. You're watching Markets Today, the show where we track about the 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar and these are the top headlines. Indian markets see a relief rally buoyed by positive global cues. Both Sensex and the Nifty gain about a percentage point each, with financials leading the pack. Mid-caps rise in tandem with the blue chips. The competition in the telecom space heats up. Bharti Airtel counters Jio's latest postpaid offering by introducing new entry-level tariffs for its postpaid family plans. The telco aims to use the new lower price point to pull cost-conscious customers and migrate some prepaid users. Reliance gains 3% after brokerage CLSA says the stock is a bargain buy with a 35% upside. The brokerage believes its possible IPOs in Jio or retail will support going forward. HDFC AMC rallies after GQG Partners sells its stake. PVR clocks gains after Warburg Pincus exits. Meanwhile, UTI AMC gains after PPFAS buys a large block. All 10 Adani Group stocks rise in trade as GQG Partners CEO Rajiv Jain says it would be a mistake for the company to pause growth plans over debt concerns raised by investors, adds that their $2 billion debt on the group is not risky. And here's a lineup of what we have for you in store today in Market Opinions. Sanjeev Mukim of JP Morgan and Arvind Sanger of Geosphere Capital Management. And the corporate voice on the show today is Rajiv Jain of GQG Partners and also Keki Mistry of HDFC. But before we get to that, here is a look at the day's market action. A relief rally on Dalal Street saw the Nifty and the Sensex end over 0.5% in the green. Financials led from the front with the Nifty Bank seeing gains of close to 1.5%. BSE companies gained a market capitalization of close to 1.5 lakh crore rupees. Prashant is here with all the action.
It was a volatile session, but by close, there was 100-plus points in the Nifty to show for it. Through the course of the day, we had many 30, 40, 50-point sell-offs, bounces, at least 6, 7 of them before the close, which gave us that bounce. The banks did even better, the Bank Nifty that is, and both private and public sector part of the banking index participated with equal amount of vigor. But sectorally, if there was one space, it was the oil and gas index which did well, and I'll come to the why in just a bit. Mid-caps and small-caps as sectors in the broader market also doing decently okay. Reliance was that one reason, 3% pop. It's been underperforming the rest of the market in this sell-off episode of the market, and it did do a little better. There were lots of upgrades, basically pointing out that the stock is actually now cheap. HDFC Life, SBI Life, actually insurance companies did well. The other underperformer has been Bajaj Finance last year and so far this year as well. That saw some sort of bids emerge. Bajaj Auto and Axis Bank are the other large Nifty names which did okay. Cuts coming through on the Nifty in HUL, Power Grid and Britannia, which lost a little bit. Market breadth was positive, not as positive as in the early part of the day. But Aarti Drugs, Adani Green, the asset management companies, HDFC, AMC, UTI, AMC did well. Stovecraft, SW Solar, CSB Bank, Gland, Sequent were some of the other gainers in the broader space. Gale was down in the mid-cap space, LTTS, and you also had Fortis, which was lower. Now, banks have outperformed the Nifty, so that's the index to watch out for in terms of looking for leadership. The Nifty itself needs to cross the 17,200 level to call it, for some more confidence to come back, for one to call a bit of a short-term reversal here. And of course, global market headlines will be very important. Tomorrow, later in the evening, we get the Fed decision, which is going to be very keenly watched and which should set the tone for the rest of the week. Back to you.
Thank you very much for that. Let's get to the market opinion then. Sanjay Mukim of JP Morgan says the valuations in the Indian markets have caught up with global peers. Meanwhile, Arvind Sanger of Geosphere Capital Management says the US banking crisis will impact Indian banks as well. Listen in.
Well, of course, this has become a very macro market, and India, as I argued in one of my notes recently, we've kind of given up all the premiums we'd earned in 2022 over the S&P or over, let's say, EM, so in relative valuation terms. So India is now back in line with averages to the rest of the world. Even today, despite the fact that, valuations have become a little bit more comfortable, the potential downsides are still fairly large. We have been cautious for a while, and we continue to remain with that sort of an outlook. And the reason is this is very vulnerable to developments in global banks. It's a proxy in the Indian market to the BFSI space, as we know.
The banking system in the US doesn't have an asset problem in the sense that their loans are fine. There is no loan crisis. Their government bonds have lost value, but if they're held to maturity, they're money good, right? The US government treasuries are not going to be a problem. So the problem lies on the liability side. And so I think the solution lies, which has been now talked about for the last day or two, is in guaranteeing a broader set of deposits. So this global crisis on deposit side is not something that has any India echo in it.
Let's get to the second headline for the day, and the competition in the telecom space is heating up. Bharti Airtel has countered Jio's latest postpaid offering by introducing new entry-level tariffs for the postpaid family plans. So Airtel has introduced a newer plan that's 599 rupees, where along with your existing SIM, you get an additional SIM, which is why they're calling it for family, because you have two SIMs coming for 599, and this is postpaid. Now, this is in response to Reliance Jio, who last week had come out with various postpaid plans with OTT connections, without OTT connections, to try and increase their postpaid base. And now Reliance Jio has also come out with such an offering. In the past, Bharti Airtel had postpaid offerings, but their plan was 999, wherein you got 4 SIM cards. But now if you want a more, a cheaper variant of that for a more cost-conscious customer with, say, just 2 people, then that 999 plan didn't work. So for that, Bharti Airtel has introduced a new variant. They've also come up with some bunch of options in the Black variant, Airtel Black variant, wherein you get not just postpaid, but you also get D2H, you also get broadband. So they're just introducing more plans which cater to different price points, different segments of the customer base, to try and increase its postpaid base and perhaps try and convert or might get their existing prepaid customers to migrate into postpaid. So that's Reliance, that's Bharti Airtel for you, and the stock was up close to about 0.3%. Let's get to the third headline then. Big boy Reliance is one of today's top Nifty gainers on the back of a positive note from CLSA, which says the stock is a bargain buy. The brokerage has a target price of 2,970 and the stock expects a 35% upside to the current price. Excuse me. According to CLSA, the company's big triggers for 2024 are the launch of Jio's 5G smartphone and the possibility of a Jio or a retail IPO. Phoenix Mills was also in focus today after Motilal Oswal Financial initiated coverage on the stock with a buy rating. Sonal is here with more on that. Sonal.
That's right. Motilal Oswal Financial Services, it's bullish on Phoenix Mills, came out with a report. It's an initiating coverage where they talk about the expansion strategy of the company, which will aid their rental growth going forward as well. As of March 2023, Phoenix Mills has 11 operational malls with a leasable area of 9 million square feet, and companies in an expansion phase. They recently acquired a land at Surat as well to develop a retail mall of 1 million square feet. This is by FY27. With this expansion, MOSL says the company will have presence in 6 out of top 8 cities and 3 tier 2 cities as well. And so far, company has seen a pre-leasing of around 90% for all its malls, and that's a good number. The rental income thereby is expected to increase by 32%. That's a CAGR growth between FY23 to FY25 to 2,200 crore rupees. They value the retail and the office assets at a cap rate of 7 to 9%. The hotel assets are also doing well according to Motilal Oswal, and that is valued at 15 to 17.5 times September 24 EBITDA. So that is the expectation in terms of what the valuations could be for all the assets put together. And the company has a plan to add 1 million square feet of retail asset every year, and that is something which will propel growth for the company as well. They say in 2 years the stock price could be at around 2,000 rupees per share. The current target price that they have on the stock is 1,700 rupees per share, and they they have a buy rating on the stock as well.
Thank you very much for that. 1700 is the target price. Get into a break. On the other side, we'll be back in a jiffy with the other headlines. Welcome back. You're watching Markets Today, and now let's go over through the rest of the headlines that we're tracking for you. Now, the fourth headline is HDFC AMC zoomed 5% after US-based GQG Partners sold part of its stake in the company via open market transactions. The firm has sold nearly 25 lakh shares at 1,600 rupees per share, while SBI Mutual Fund has bought over 47 lakh. Vivek is standing by with the details. Vivek?
HDFC AMC, it's actually given the fact that the overhang of further stake sale from GQG Partners is now gone away. So in yesterday's block deal, almost 2.2% stake is something that they've exited, and SBI Mutual Fund has picked up the entire stake. But when it comes to HDFC AMC, very interesting trigger and expected to play out over the next couple of quarters at the earliest. Aberdeen Investment Management, actually on December 6, 2022, had intimated that they are looking to exit their entire 10.21% stake, out of which 9.9% stake they were looking to sell to one single interested party. So now once that happens, analysts believe that the stock that was deleted from the MSCI index will once again get a re-entry back, and also the overhang of any sale goes away.
Thank you very much for that. Moving on to the other stocks making headlines today. PVR gained after Warburg Pincus exited the company. UTI AMC also rose after PPFAS brought a large block. Surbhi is here with a wrap on all that action in these two stocks.
Thanks for that. So PVR and UTI AMC both have gained traction today in today's trading session on back of some interesting block deals. Now firstly for PVR, where Warburg Pincus through its affiliate Berry Creek Investments has sold its entire 2.49% stake in the company. Now the transaction totaled toward 380 crores and major mutual fund houses were the buyers there. SBI Mutual Fund House bought shares worth 229 crores. ICICI Pru also bought stake worth 100 crores, which is close to 6.4 lakh shares, and Society General bought 3.2 lakh shares. Next is UTI AMC, which also surged in trade on back of some block deal where PPFAS Mutual Fund bought 11.2 lakh shares at 636 rupees per piece to a total of 714 crores.
Thank you for that. Let's get to the fifth and the final headline. It would be a mistake for the Adani Group to pause growth plans. That's the word coming in from Rajiv Jain of GQG Partners. Speaking exclusively to CNBC TV18, Jain emphasized on the need for the group to avoid making changes solely to please the market. Rajiv Jain, remember, has invested nearly $2 billion into the Adani Group and believes the investment is not risky. Listen in.
So our view is that they need to keep pushing for growth while managing the debt level, which I think they've already done that. I mean, they announced some of the shelving of the project, so on and so forth. So I think it'll be a little more manageable from the debt perspective, although we are not concerned as at the current point from a debt side. But I think the objective is to keep growing. Look, I think it'll be a mistake to slow down to get the debt levels down. I think these businesses are supposed to be levered. That's the model. So debt has to be in a sort of in a measured way. However, our view is that don't change anything to please the markets. Coming back to US, the problem so far is limited to Silicon Valley connection. If you look at the amount of frothiness you had in tech space in US and rest of the world, frankly, I used to think that some of these venture capital firms are delusional. And Silicon Valley Bank has a long history of bad behavior. We are not concerned about contagion risk.
Okay, let's move on. Sterling and Wilson gained 7% in trade today after bagging a 2,100 crore order from NTPC Renewable Project. Yash is here with the details.
Well, significant order win as far as Sterling and Wilson Renewable is concerned. They've received an order from NTPC worth 2,100 crore rupees. The place of execution is Gujarat. Now, as far as the order itself is concerned, it's a 1,200 megawatt PV project which comprises of 4 blocks, 300 megawatt each. What sources have told CNBC TV18 is that the order is expected to be awarded in the next 40 to 45 days. NTPC for this particular order is expected to import the modules, which may lead to a faster execution of the project itself. And out of that 2100 crore, according to our sources, about 1400 crore is expected to be executed in FY24 itself. Importantly, as per our sources in the company, about 10 to 12% of the gross margin is what the company may receive as far as this order is concerned. Very important to point out that this order which they've received yesterday is not supposed to be confused with the order which Sterling and Wilson Renewable received in the month of August 2023. That was a 2200 crore order. This is a 2100 crore additional order which they've received from NTPC. The place of execution remains the same. So in totality, the total order which has been received in the last 1 year from NTPC towards Sterling and Wilson Renewable is about 4300 crore rupees.
Thank you very much for that. Moving on, HDFC CEO KK Mistry has said that the HDFC Limited HDFC Bank merger was approved faster than anticipated. In conversation with CNBC TV18, he also added that the merger will be completed by late June or early July.
Some of the approvals came faster than we expected, so we are absolutely on track. And my sense is that sometime towards the latter part of June or probably July is the time when the merger will get completed in all respects.
Moving on, the two-day meeting of the US Fed starts tonight. Will the Fed bite the bullet and hike rates amid the global banking turmoil? The CNBC Fed Survey shows 72% of the market participants are expecting a rate hike, but only 51% say the Fed should hike rates. Steve Leisman is here with more.
This is an unusual meeting in extraordinary times, and it gives us a sort of unusual survey with a lot of uncertainty and disagreement about what will the Fed do and what should the Fed do. Take a look at our Fed expectations chart. 72% say there's going to be a hike, which is pretty much in line with how the market is priced. Interesting because our survey was from the end of last week. But only 52% say the Fed should hike. So some percentage think the Fed ought to hold its powder right here. And the peak rate remains pretty high, actually higher than it was at 5.20 for June. But then 86% say the Fed either cuts or pauses at the next meeting in July. So, okay, here's the thing. We asked, what's the more important driver of Fed policy? Protecting financial stability and the health of the banking system or reducing inflation? 52% say it's financial stability rather than inflation. Here's some of the commentary we got. Joe Lavorgna from SMBC Nikko Securities writes, continued hawkishness from the Federal Reserve would justify a further marking down of our forecast for growth and recession severity. And then we have Mark Vittner of Piedmont Crescent Capital. He says the Fed's earlier missteps on inflation and its abrupt correction this past year laid the foundation for the crisis we face today. The Fed should not compound its earlier mistake by giving in too early in the inflation fight. What about the outlook for recession? 55%. It's up from the prior survey at 51. 57% say it's going to be a mild recession. And then interestingly, September 2023 is the average start date. That's a quarter later than the last survey. That's because we've had this strong growth in the first quarter, and the average length of the recession seems being 8 months. The Fed's decision tomorrow comes down to pretty much what you guys were just talking about. I think whether it feels the banking turmoil has settled down and whether it can handle monetary policy and inflation with one set of tools and financial stability with a different set. That's what Lagarde said last week, guys. I just don't know if the Fed wants to run that experiment right now.
Well, with that, it's a wrap on this edition of Markets Today. Thank you for watching.